The Japanese stock market is causing troubles again. I was not planning on recording you guys another video tonight, but I was just looking at a bunch of different things in the market, and I thought instead of just me looking at this stuff alone, I'll record you guys a little video and release this for you guys so we can, because I actually want to talk about a whole bunch of different stocks in this video and kind of what I'm seeing out there, which is very interesting. The Nikkei getting hit again. The Nikkei was coming back. The Japanese stock market was coming back very nicely, and a big downdraft here today. I do not trust this stock market index right now. I do not trust it at all. It is very suspect, extremely suspect right now. And I think a lot of people are kind of playing it as a trading vehicle right now because it's extremely volatile. And if you can play it right as far as these ups and these downs, I mean, there's definitely money to be made there, certainly, right? But I do not trust this index whatsoever. So it's interesting kind of that's going down there. Looking at Nvidia after hours, down 2.4%. This is going to be very interesting to see where that one opens, down to 105 here. It's going to be interesting to see if it breaks 100. That's going to be very interesting to see if it breaks 100. We might talk about Nvidia in just a moment, a little bit more. I was looking at oil. Oil's under 70. WTI under 70. Wow. 69.90. And here we are at the beginning of September, like usually summer, strong for oil, very strong for oil. And it just looks to me like oil is saying recession, right? Is that not calling recession? Like it's got to be. But here we are. We're about to come up on rate cuts. Does oil spike up? I think that's going to be really interesting. I was looking at the overall futures. Dow's down over 100 points. S&P 500's down. Nasdaq's down. Obviously, we spoke about oil down to 69.87. It's incredible. I was looking at something I don't look at that often. Ethereum. Have you guys seen how weak Ethereum's been? Obviously, everybody in the crypto space always pays attention to Bitcoin, right? Bitcoin's the big dog. Ethereum's always been that number two in the market, right? And that's the way everybody always views it. And it's incredible how weak Ethereum's really been. This is a 3-month chart. Ethereum was 3,800 3 months ago, and it's down to 2,300. And this is a time where Bitcoin has been slowly going down for the past many months, about past 6 months, but it hasn't been that weak. And Ethereum's just incredibly weak. So I just thought that was kind of a little interesting here. By the way, if you guys didn't get to see the videos I posted on the main channel last few days, definitely want to check out those. I know it was Labor Day weekend, so a lot of people got to see everything, but this is obviously 4 stocks I'm buying September edition, going into the stocks I'm buying now. This video was straight educational. I recorded you guys a 52-minute video on 16 years of stock market advice in 52 minutes, and then I recorded a video here today on what's going to be transpiring over this next 25 days, which is a whole lot, okay? Now, obviously all eyes are on Nvidia today, and they should be. I mean, it's the most talked about stock for the past year and a half. Like, it should be all eyes on it when it's especially when it's doing crazy stuff, right? But it's fascinating to see Nvidia because if we go back to not that dang long ago, right? If we go back to just that Monday, the stock broke 100, right? And then obviously the market came back, Nvidia came back. This is going to be a very important range to see if it breaks 100 again and goes under that, and then what transpires from there essentially. Because that's a very important level. I think that's a very important level for the stock. And if we break that, who knows? Maybe all bets are off and we can go down to 80s or something. Now, would I be interested in getting back in Nvidia? Like, let's say it breaks 100 and it goes in the 90s. I might be. I mean, it might call me back. If it goes in the 80s or the 70s, I might have no choice. Even though I'm still very wary about 2026, 2027 numbers. I mean, at the end of the day, if a stock goes low enough, I'm going to buy. But it is also important to remember where the stock started this year. It started at 47. So even if it was to go down to $70 or $80, the stock is still up so much. In this year, it's been an incredible year for the stock. I mean, heck, even if the stock finished the year at, let's say, $70, which would be crazy downside from here, right? 30% plus downside or ish, right? Even if it did that, it would still be an incredible year for Nvidia stock, like from 47 to 70, like that would still be a win. Like it's fascinating to kind of think about that, right? AMD, this is one of those that I'm looking at as a potential here. There's only upside for AMD in regards to a few different angles, but if the Department of Justice is coming after Nvidia now. I don't know if you guys know that or not, but the Department of Justice is coming after Nvidia. They got a subpoena going in. That's why the stock's down more after hours, right? And my guess is it will probably be down tomorrow. But And my guess is also somebody probably knew this was coming, right? Because why would Nvidia stock been down that much here today? I think somebody already knew about the subpoena coming. But anyways, that's a little inside stuff people know. But in regards to AMD, I think if Nvidia has to change their business model at all, right, and the Department of Justice really cracks down on them, that's a big if. If that does happen, there's only really upside for AMD in that sort of situation. And this is a very interesting stock this year. It's down 1%. So even though Nvidia is up, 120 something percent this year, and these stocks usually trade kind of together. They're not identical, but they usually trade roughly in the same range. They're not even in the same stratosphere right now. They're not even in the same universe. Nvidia up 119%, while AMD's down 1%. That's wild. That's wild to see that sort of divergence here. So, obviously, I think AMD made a very good acquisition here recently. So, I don't know, man. AMD's one I look at, and maybe I might have to take a risk here. So, looking at 1000xstocks.com here on the compare feature, right? Forward P on AMD is around 39. Forward P for Nvidia is about 44. 2-year out forward P. Keep in mind, these are all projections based upon what analysts are kind of thinking here. AMD is around a 22, NVIDIA is around a 30. Now, the interesting thing is you could look at this two ways. You could look at it from one angle saying NVIDIA has been the far better company. They've been ahead in the AI market by several years over AMD, and so they deserve to command a premium over AMD. That's one way you could look at it. Another way you could look at this, you could say AMD is going to likely outgrow Nvidia in terms of revenue growth rates and earnings per share growth rates significantly, probably in 2025 and certainly in 2026, 2027, as AMD plays a game of catch up there, right? Which I think Lisa Su will catch up. And even if we look at kind of what analysts are expecting, look at next year's expected earnings per share growth for AMD, 129% versus 34%. 34%, if Nvidia still does that, that's a great number, but it's not 129%, right? As far as next year's revenue goes, and they still have Nvidia beating out AMD next year as far as revenue goes. I don't know. I do think that's possible. I really think AMD, in terms of the big numbers, will really come 2026, 2027. I think that's what we'll see play out there. So to position into AMD at the end of this year and into 25 might make a lot of sense. So I don't know. I don't think I've ever owned AMD stock. The only stock I've ever owned over time out of those two, I don't think I've ever owned AMD, but I certainly owned Nvidia over time, right? I owned Nvidia back in, late 2018, I bought the stock, and then obviously owned it recently and then sold out completely, a few weeks ago or whatever, right? So, I don't know, we'll see what happens there, but it's interesting. I was looking at the potential buys watch list, right? So these are the stocks I might buy. Some of them I already have positions in, some of them I'm looking at here. So let me get Nvidia out of the way here. Honest fell quite a bit here today. The stock's been very good. The Russell got hit hard, right? The Russell was down 3+% here today. The Russell getting hit 3+% is not going to be good for Honest, but that works both ways, right? I mean, if the Russell goes up 3+% tomorrow, don't be surprised if Honest is up 7-10%, right? Little food for thought in regards to that. SoFi got hit very hard here today, which once again, the Russell got smashed. SoFi's going to get smashed. The KRE probably got smashed today. I haven't seen KRE yet. Let's take a peek at the KRE. KRE is a regional bank index, and let's take a peek at that. And wait, was it the KRE? Did it hold well? Let's see. KRE actually did decent. I'm impressed. Only down 1% for KRE. That's a win, actually. I'm shocked that it was only down 1%. I would have thought way heavier than that, just to be quite frank. Shopify, this stock has had a shaky year, but the numbers have been really good out of Shopify. Really good out of Shopify. Let's check some numbers here on Shop. Always going to trade at a higher valuation. We know that. It's because it's got so much growth. It's one of those companies like you look out 5, 10, 15, 20 years from now and all you see is growth. And there's not that many stocks you could really say that with. It's basically kind of like a SaaS business model. Forward P 69, 2-year out forward P 50 on the stock, but look at the earnings per share growth of this company. Look at this, trailing 12-month revenue growth, 20+%. Current year expected revenue growth, 20+%. Next year revenue growth expected, 20%. How many companies can you really count on growing 20%, 20%, 20%? There's not many. Those companies are special. Shopify is one of those special companies. That's why it's pretty much always a buy. Celsius, man, that stock can't get a freaking break. It's unbelievable. It's unbelievable. I mean, seriously, this stock cannot catch a break. Jeez. Incredible, man. Now down 62% from the top back in May. Right? Jeez. But Celsius, I don't get it. I don't get why that stock just doesn't see a bottom. It's not like the market's really been that bad, right? I mean, let's compare the S&P 500 to Celsius over the same exact amount of time, right? Let's see where we're at here. Over that amount of time, the S&P 500 is up about 4%, right? 3.9%. And Celsius is down 62%. And the scariest part is, what if the S&P 500 was down 4% or 10% in that same amount of time? In this sort of situation, where would Celsius be? That's something I really wonder. But, you know, another 3.6% today? I'm just looking at Celsius and I'm like, but remember, what did I tell you guys is my potential buy price for Celsius? What did I tell you guys? I told you I'm going to look to buy Celsius at 35 and under. That baby goes under 35, I'm going to have to start a position. If it goes under 30, I have to start a pretty big position. Now, additionally, the strategy I'm thinking about employing in regards to Celsius is not just buy Celsius stock, it's buy Celsius along with Monster. So I'd like to buy those two together to mitigate risk. Just in case I'm wrong about Celsius, like let's say, you know, buying Celsius 33, goes down to 31, goes down to 27. Okay, and I'm buying the stock. Let's say, I don't know, I'm wrong about it. And like Celsius is just, you know, they can never get their numbers back and they're just floundering and it's no bueno. Well, that means Monster probably did just fine, in my personal opinion, right? So looking at these two, Celsius forward P38, Monster 27, a 22 forward on a 2-year forward for Celsius, 22 also for Monster. Celsius should be a far outgrower in terms of revenue and EPS over the coming years. But the scary thing is analysts do have very high numbers for Celsius here. And that's the one thing that you got to be a little fearful of in regards to thinking about, where does the stock bottom? Like, is it possible it could go to the 20s? It's possible. Like, let's say analysts all start saying, we're way wrong on these projections we have for the next year or two in regards to Celsius. And the analysts start turning face. No face. That could be ugly. I want to go to valuation here and run some projections here for Celsius. I want to run some modest projections here for Celsius. Like, let's say, what are some really modest numbers for Celsius? Really modest numbers would, I think, be around 18% revenue growth a year, right? That's horrible compared to how much Celsius has been growing. So let's say horrible, 18%. Net income, let's say net income growth, it should far outstrip that. So let's say net income growth is about 28% on average over the coming years, right? Which I don't think is hard for them to do at all, 2025 to 2028. And I think a 25 to maybe a 25 to maybe a 35 PE sounds about right for the stock, right? It's a growth company. It is a one-trick pony, which is a little scary, right? It is a little bit scary. If they can get into some more product categories over time, that could be good, because then people won't view it as just, it's the energy play. So looking here at kind of 2025, $34 to $48, priced about right. Looking at 2026, 44 to 62. That gives us a pretty good CAGR there, 10 to 30%, 10% on the low end, obviously, right? 2027, that puts us at about a 16% CAGR to 29%. And then 2028, about 19 to 29% there. And those are I think those are pretty modest projections for Celsius, right? Unless there's something core really wrong with the business model, like really wrong with the product or something, I think that's pretty fair. So I don't know. I think Celsius looks pretty tasty. And if it goes under 35, you got to start a position there. Nike. So as I spoke to you guys about in regards to Nike, that's a stock I'm looking at that is going to likely bottom in the fourth quarter of this year. like a real bottom. And you might say, you think it could go all the way down here? I actually do. I actually do think it could. And well, you might say, well, why buy up here? It might not go down there. At the end of the day, Nike, whether I get it at $70 or $80, it's a steal deal for where I believe that company's going over the next 3 and 5 years. So, I'm not just going to hold out and say, well, because it might go down to 70 again, it might bottom in the fourth quarter, therefore I can't buy it now. No. At the end of the day, I believe Nike is going to be $150, $200 stock a few years from now. And so whether I get it at 70 or 80, in the grand scheme of things, it's not going to matter. All it's going to mean is I made a bunch of money. And the last thing I want is say, oh, wait till it goes back down to 70, and that's when I'll buy. And then that never happens. And all of a sudden it goes maybe it goes down to 77, then it goes up to 82, 93, 105, 115, 150. And I just, and I'm like, oh, I got concerned with a few dollars difference. Like, come on, man, you can't be doing stuff like that. Whirlpool is another good example. I think that stock could go back down here and bottom in the fourth quarter this year. Remember, a lot of these stocks will face tax loss harvesting. They're going to face it, man. Win, another stock. I think they're going to bottom fourth quarter this year. Tax loss harvesting is going to come in that baby. You know it, man. Look at who's made money in Win stock. No one. So a bunch of these Wall Streeters are going to sell out at the end of the year. Take those losses there. Look at this. This is a 1-year chart. If you bought Win at any time in the past year, you haven't made money. Right? So there's going to be tax loss harvesting in that one. Cake, you're likely not going to see any tax loss harvesting in that one because people likely made money in that one, right? Bath and Body Works, great example. Great example. Look at that vicious drop. I mean, my gosh, Bath and Body Works, they sell soaps and candles and stuff like that, right? From 52 down to 30. It might break 30 here. I think that's another great example of a stock that will see tax loss harvesting at the end of the year, fourth quarter. And I would probably bottom in that fourth quarter. That's another great example of that. UPS. A lot of these are great dividend value stocks. UPS, bet it bottoms in the fourth quarter of this year, right? Another one, you'll see tax loss harvest in that one. Lululemon, I don't think it's probably reached a bottom yet this year. Probably going lower. Don't be surprised if you see Lulu with a 199 in front of it at some point this year at the very end, right? Estee Lauder, another perfect example. I think Estee sees a bottom likely in the fourth quarter. So you just got a long list of those sorts of companies that, the bottom's coming. But anyways, just wanted to cover that for you guys. Drama going on out there. It's getting fun. Anyways, make sure you check out those videos on the main channel if you need to see those. This is just a straight gem dropper. This is covering the stocks I'm buying. And then this one is covering the next 25 days. Take you through everything. It's going to be insane. Much love and have a great day.